Hello everyone, welcome back to CryptoCache. Thank you so much for joining me here. Happy Sunday to you and your family. Hope you're having a great day. We're just going to take a quick peek at Bitcoin, kind of take a look at the futures and the CME Gap, kind of just help understand what that might look like when the market opens here in a few hours. And of course, if you're new to the channel, not a financial advisor, love to teach people to trade, feel free to reference my website, cryptocache.tech. It's the site you can go ahead and, of course, register for my trading academy, community, and signal group. We've got an awesome group of folks there, and it's really just a great experience. So thank you again so much to my current community members for being an amazing part of my life, but also, too, congratulations on all the profits we took recently as well. It was a fantastic Friday and Saturday for us. Looking forward to tomorrow to open up some new trades. What we want to find out here today, of course, is if it's worth shorting Bitcoin. I think in short, based on what I saw yesterday, it would probably be a no. But again, we want to kind of look and see what that gap might look like and kind of go from there. In fact, why don't we just peek right at that immediately? So the CME futures, right? So a lot of times when there's a gap, it's going to get filled, either immediately or eventually. So that being said, we had a previous gap here, of course. This is back in June. That still is yet to be filled. Okay, so again, eventually that will have to fill itself, but between now and then, what we want to really focus on is the current situation. So in other words, we can see right here, 21,345 was the close of the futures on Friday. Okay, so when the market closed on Friday, we essentially left off there. We're at 21,600 right now, so there's a $300, $250, right in that range gap that might get filled. And so, I mean, it's not that big of a gap, honestly, but it is something that's relevant and something to understand that the price might, pull back to right around 21,300. That's actually today's lowest candle wick. And that would effectively be a potential bouncing point, which it kind of already did that, but in the same accord, sometimes that gap needs to get filled. So just be prepared for that. A lot of times, if the market opens just say at 21,600 and futures, they'll sell off until they get down to that level. Okay. So again, just something to kind of think about in the future. Taking a look at some of the standard stuff here, let's go ahead and take a peek at some of the moving averages, because I know they've moved around a little bit here, whereas the 50-day set moving average is working tentatively as a resistance. So we got to recognize that the 50-day SMA is a really big milestone, because it oftentimes runs concurrent with trend lines. And now that we've broken through this descending trend and we're, quote unquote, no longer moving down, at least tentatively, right? We can expect the 50-day set moving average to work as a resistance, but hopefully become a new key level support eventually. Okay, so again, once we haven't been back up over the 50 in quite some time, and it took a very strong Friday a few weeks ago to essentially get that price to come down that low. But again, 50-day SMA is a really important thing. A closure above, just say 22,000 as a round number, would be amazing. We'd love to see that. That would be an awesome situation. The thing I don't love about what I see here so far, and this is just, it's still too early to tell. The day hasn't closed, plus it's a weekend, sometimes not always the most predictable. But I can tell you that right here with this doji candle, forming right at the key level resistance, it's not a great sign, but it isn't terrible, right? A lot of times it just tells you that there's going to be a potential shift in momentum, and a lot of times if you can, sustain that price point, you can continue higher as long as that resistance level is broken. We're pretty much trading right at the resistance of 21,600. So, again, a closure above that today would be nice. It would be perfect. We can close somewhere around the 21.7, 21.8 range. But again, for the moment, that's the only thing I don't really like here so far on the chart. One thing to recognize, though, is that we are back up over the 50-day set moving average once more. Finally, it's taken a while for us to get there. Last time it was there was back before August 19th, that massive sell-off on that Friday. So it's been literally about 3 weeks since we've seen the price action come back up over the 50. So that's positive too. Really like to see that, because then again, price action comes down, it can bounce off 50 on the RSI, and that could very well be the point of 21,300. All right, so again, we could very well see that if the momentum starts to lose its momentum essentially and come down. When we look at the MACD here, we haven't lost, these oscillators are still increasing, so we're still expecting further upside. What you want to look for on the MACD sometimes, but more specifically on the daily, is when this next oscillator, for example, is going to be lower than the previous. That tells you the momentum is essentially, we're losing that momentum, so to speak, right? And for the moment, not a big deal, but something to be mindful of. So that's kind of where we're at there in that sense on the daily. Daily looks pretty decent, all things considered, minus that doji candle, but again, a doji candle on a weekend, I'm not super sold on it being, a direction changer, but it doesn't make sense, just logically, oh, okay, the price is overinflated. Of course it's going to want to come down. It's been held down for way too long, though, too. You got to recognize there's a lot of buying pressure and a lot of things that happened on Friday to cause that to occur, especially with a lot of liquidations happening on the inverse with the shorts. Shorts are a little concerned and timid now, based on the simple fact that the price action probably destroyed them for lack of better terms. All right, so take a look here at the 4 hour. We can see the 50-day set moving average working itself concurrently with this ascending trend. So I would say as long as we stay above this trend, we should be in good shape to see the price action continue higher. So I'm not going to be super concerned if the price comes down to bounce off 21,000 or just say even, well, actually 21,000 would be probably an important indicator, because if we go below that, it might be cause for some concern. But again, we got to recognize that this previous level here, right at about 20,400 or 20,500, was a strong resistance in the past and should work as a strong support here as well. It's also right here at this little corner, so to speak, where the descending trend will essentially work as a support. And the ascending trend will also do the same thing, so the price action should stay above. And a lot of times too, when you look at the Ichimoku cloud on the 1 hour, it'll run concurrent with a lot of these trend lines as well. Mostly positive though here in that sense. I like what I see there. RSI is still a bit on the overextended side, but that's pretty standard considering how high it went. We want to just it'd be great to have another 24 hours of consolidation at this price point. Even retracement down to 21,000 would be nice. Get a nice lower entry, and then of course take a long from there. That's kind of what it's shaping up to look like. Now here's something that's important to recognize too though. On the 4 hour, we do have a MACD divergence that is almost come to fruition. So what I mean by that is, if you're going to use the MACD on any time frame, I feel like the 4 hour time frame is the most consistent. It gives us the most relevant results. So in that case, hypothetically, if you were to bank on it, it seems pretty likely that the 12 is going to intersect with the 26 in a downward fashion, right? Essentially giving us that bearish divergence, right? And in that sense, that would imply that we are going to come down perhaps even to the 21,000 range and possibly bounce. Okay, so it does seem likely that we'll see some pullback, either filling the CME gap at 21,350 or 21,000 essentially at the lowest point there where the price action will potentially bounce off that level. Okay, so again, mostly good stuff here, except also not, we got more positive in the sense of support levels being in a good place, but there's also a lot of indicators kind of telling us that we should expect a slight pullback. I would not recommend shorting very much if you are to. Very, very small position size, as well as just a small duration. You don't want to stay in there for too long. I don't think it's going to, it has so much momentum that there's a great chance we could even still see it leg up again. Okay, and if that happens, it's going to be tough to have a short position open if that were the case. So just, again, play it safe if you were to do that. So taking a look at the 1 hour, let's go ahead and summarize and call it a day. Taking a look at the cloud here, we can see that this cloud is essentially soon to be tested. So the price action continues sideways and just keeps going here. We'd still remain above the cloud and essentially have that green light to leave our long position open. But in truth, you should have taken some profits by now, because the lagging span's been intersect with the price action for some time. Conversion line keeps bouncing up above and below the baseline. Pretty much tells us that we're tentatively range bound, likely between 21,000 and 21,600. Again, depending on how much further the price wants to go. It could literally continue higher. It's showing very good strength here. In fact, let's take a quick look at TD sequential and see if there is any indication of exhaustion. So we hit the 9 previously, of course, we know that. And then we hit another 9 here to the upside as well, and then it's consolidated ever since. So this is a very healthy pattern, still making higher lows on the smaller time frame. So, we should likely see the price action maybe retrace to 21.3 or 21,000, and then probably continue from there, just based on the overall sense that is a fairly healthy situation. Keep in mind though, the Ichimoku cloud, if the price action were to come down, just say to bounce off this level, we wouldn't have full on confirmation until it breaks back up above 21.6. So again, I'm not recommending you just take a long right at 21,000, but if you were to, hypothetically, you should be in decent shape. But that Ichimoku cloud is not really, since it's so overinflated here from this big push up, it doesn't have a lot of room to grow. So there is a great chance we could lose the cloud, and if so, that might actually give us a short inclination, right? Again, different little things here. That's why it's always best to be patient and wait in situations like this, more specifically on the weekends too. Like for my trading community, for example, I don't, they already know that I don't send tremendous amount of trading signals throughout the weekend, just because it's kind of a flip of a coin in a lot of cases based on lower volume and essentially everything is just slower, so to speak. That being said, expect some correction here today, likely to fill the CME gap. We also have the Eastern markets opening later this evening. That should be interesting, and we'll go ahead and go from there. But honestly, at this point, Bitcoin's looking overall fairly decent. I do not think that we're going to lose a lot of this ground here. I do think 21,000 should hold as a decent support, and possibly even 21,300 as that CME gap gets filled. Okay, so just some things to pay attention to. So we'll look forward to seeing y'all in tomorrow's video. Thank you so much for joining me here. Again, if you're not currently a community member, CryptoCache.tech is the website. Link in the description below. Feel free to check that out. Look forward to working with you. You have yourself a great rest of your day. Take care.